Awesome. All right, so let's get started. I've seen a lot of folks are on the line but don't have their videos on. So if you can switch your videos on, it'll be nice to see faces. And let's get started. So I'll let Reva introduce Varun. She's an ex-Urban Company employee. So Reva, why don't you go ahead and introduce Varun today?
This is very
We have
interesting.
other Urban Company employees,
Yeah.
Urban Company investors on this call. This is a good troop.
Awesome.
Yes. A lot of people from the Urban Company family. If we are counting investors, Varun, I don't know if you want to count them in or not. But yeah, hi everyone. It is my pleasure to virtually introduce Varun to our community. He started UC in 2014 along with Abhiraj and Raghav, and has built it to a platform that, I'm going to say it, is one of the largest and highest quality services marketplace in the world. And it is now even more exciting that Varun is also spending time to focus on US launch that should be coming soon. He has a very sharp business acumen, impeccable eye for detail, and his approachable leadership style has been very, very inspiring to all of us. And we are very glad and grateful that he's spending this time with us. So if we could extend a warm welcome to him and get started with the Q&A, that would be great.
Awesome. Thank you, Reva.
Thank you.
And thank you, Varun, for being here. Very good morning to you in India. I know it's early there, so thanks for taking the time out to do this and to talk to our community. A very quick introduction. So this group is by and large comprised of folks who are part of the South Asian Business Association at HBS. So it's open to international students as well as Indian Americans and as well as South Asian Americans. So broadly the South Asian community. So that's the kind of membership that we have. And thanks again for being here and talking to us. So Varun, I want to get started with your journey as a founder. You went to IIT Kanpur, worked at Qualcomm, worked at BCG. You could have gone on like the stellar corporate career track. What made you change, or what made you shift gears away from, your stellar corporate career track and decide to set up a company in India?
Yeah, great question. Maybe I'll preface a quick Mark Twain quote, which is important here. He said there are two important days in your life: the day you're born and the day you know why. So I think for me, the reason to move back and get on a different track was a little bit of the latter. Just discovering what I really wanted to do in life and spend the next 20-30 years of my life doing. But if I talk a little bit of the backstory, I've always made slightly deliberate choices in life. So I grew up in a business family where nobody before me ever became an engineer. The choice to go to IIT was my choice against the wish of my parents who knew nothing about IIT. Neither did I. It was more a choice of being at a place where I would get exposure and be able to figure out what I really wanted to do versus take the beaten track of joining the family business. Once there, again, there were several career options, including a PhD, a very high paying job in the oil industry in India. But I chose to come to the US, again, purely believing that I needed, again, more exposure than I already had. And that would help figure out what I wanted to do in life. So a few years, let's say in a year and a half in California in a tech company, made me realize I was somewhat good at building tech. But building tech to just make wireless internet that was already fast in the US even faster was not very fulfilling. And there somewhere there was a calling within to come back to India and use my skills to bigger and greater use. And more than anything, just dedicate the next 20 years making India a more developed place. That thought was all that I had, and everything else followed.
Awesome. No, thanks for sharing that. And just quickly, some housekeeping rules while we are on the call. Just for the folks who just trickled in, we'll be doing a moderated 30-minute fireside chat followed by question and answers. So please keep your questions ready. And if possible, please keep your videos on as well. It will be nice to see faces. So Varun, thanks for sharing that. How about the fact that, like what was the starting point of your team formation? So, you all started out as a team of 4 or 5 founders. How did that happen? It's usually uncommon for startups to have more than 2 founders. So where did you meet your founders? How did you all decide to work together? And how did you all manage those initial dynamics in terms of pitching to investors that, hey, we're a team of like four co-founders? How did that happen?
Sure. So small correction, we're a team of 3. And 2 of us, went to IIT together, know each other since first day of college. So I think that nothing very atypical there. And when we mutually decided that we had to move on from our so-called high-flying corporate career, we couldn't think of anyone else to take the plunge with. So that was me and Abhiraj. We met Raghav along the way. We sort of met him at a bar. is the funny story, because the 2 of us had shut our first business and were brooding over a few drinks, and he had shut his first business and was doing the same. In each other, we saw a lot of common ambition and common set of values of what kind of business we wanted to build. Yet somewhat complementary skills, because both of us were good at business and he was a techie. So that's how the 3 of us got together. The atypical part is that we got together without an idea. So it was a team of 3 who somewhat knew that they wanted to build a technology-driven large business in India. And we actually spent a fun 5-6 month period together figuring out what that business should be. So I think that maybe that part is more atypical, because usually people bond over an idea and make that the basis of their relationship.
Almost sounds like a scene from TVF Pictures, for those who get the reference about hanging out at a bar and coming up with entrepreneurial ideas. Can you sort of walk us through what your core? So when you figured out your product market fit, or when you figured out that this is the market you want to go after, what was your core thesis that you developed at the beginning of Urban Clap, and how's that changed over the years? So where are you today? What's your core thesis today? Can you walk us through that evolution?
Yeah, absolutely. So like I said, the first 6 months was spent with this question in our mind to say, we want to build a large business in India, but what is it that we should build? This will sound weird, but we literally spent every day of those 6 months talking to consumers in India, being on the streets, being in the markets, meeting people, because they knew better than us about their problems. And when we took a step back, we realized that one of the biggest problems that resonates across these thousands of people we've met is that buying services is a very important part of their lives and is extremely, extremely broken. It's to the point impossible to find a service professional, get a good quality work done, and pay the right amount. So that became the thesis, to say that this is a very large part of people's lives and needs to be better. People need to feel good about spending their money. People need to feel good about taking services. And at the same time, the hardworking individuals involved, the service professionals, they need to have a livelihood of respect and good earnings, because that was, of course, also not happening. So that was the core thesis, and that core thesis has remained absolutely unchanged. The details change. How you would make this happen is being figured out along the way, but the core thesis is the same. And in fact, we have realized over the last 3 years now that this core thesis is very universal. Without technology, staying offline, the services industry is going to continue to be broken. And I think the US is a good example of that.
So I'll hold on the US question till the end of at least the moderated piece, because that's an interesting conversation to have and relevant to a lot of the folks who've tuned in. But coming back to the early days, what was your thinking around, so when you were like looking to find problems in the market. I'm just going to admit another person in the waiting room. Yeah. So when you were like looking at problems to solve in this market, you could have also, I'm sure you could have found a whole host of other areas that you could work on. For example, like going after SaaS opportunities, right, which don't really require you to come up with a solution that also, integrates itself with the real world, with real people, and therefore is less operationally challenging to execute. What made you think, or what made you choose to go after this problem, which is so enormously difficult to solve, when you could have clearly also like accessed some lower hanging fruit? So what was that thought process like when you were like prioritizing which idea to go after?
Sure. I think we did make a more gut call to say we like building consumer businesses, and that was true of all three of us. I guess maybe working in consulting, we realized we didn't want to work with businesses anymore. So that was clear from the beginning. Build a B2C business. We even thought of very traditional B2C businesses, because that's the background I come from. And there we realized that we have no advantage. People who have the money are going to continue to build traditional businesses. Our advantage is technology. So there the one-liner was, let's build a direct B2C technology-driven business. That was a decision from the get-go. And of course, like I said, in this exploratory period, there were many ideas that came up, got shortlisted, got dumped. So it was a very interesting phase where we met consumers, came up with ideas, did some proof of concepts, went back to them, and tried out a bunch of different things over 2 to 3 week long periods. And in this time, we realized what truly mattered to us was thinking maybe 10-15 years forward, and imagining a picture about the country and imagining our place there. What will India look like? What will we be doing? And what would we have created in these 15 years was, let's say, the main frame from which we wanted to take this decision. And so it became obvious that let's go after the problem that is most prevalent and most acute in the lives of everyday people, and nothing else matters. Like how difficult it will be was not even a decision criteria. Let's just go after something that is going to be biggest and hence most satisfying was our simple lens.
Makes sense. Could you also touch upon what your dynamic with your early investors was like, given the fact that you were an atypical unit, you didn't have a business plan when you at least started out as a team? How did you navigate your conversations with your early investors? Like, who did you even like call first when you were fundraising? What was that process like?
Yeah, very interesting. We just got connected to, let's say, a few angels through networks, as well as a few investors. The initial conversations, of course, started off with some disappointment, because most people were surprised by what we were doing, and said, what idea is this? Like, is this even a problem? And the people who got it said that this is impossible. Like, you cannot make service professionals in India professional. It's ironic. So they would almost give us ideas of their own. Like, you're a good team. Why don't you close this idea and I will give you an idea that you can work on, that you might be more successful with. So went through our share of that before we said, okay, let's not focus on raising money. Let's just focus on building the business. And we have some savings, and we made a grand business plan of surviving through 1 year. and just got on with our work. And funny things happen when you focus on the work. So the day we launched the website is when we got a call from two individuals who are now our angels. They are founders of Snapdeal. They basically said, okay, product launched, great, come meet us in 2 hours. And they gave us the money because that's what they wanted. They wanted people who had conviction on their idea beyond a PowerPoint presentation, who would go on to work on it, even if investors did not believe. And maybe a week after, we had conversations which were successful with some of the most blue chip investors in India as well. And that's how we got 2 of our seed VCs on board. Of course, all of them had their questions and doubts, and I guess they were like most early investors, backing a team that looked promising and had done their share of getting their boots rubbed on the ground. Because like I said, our last 6 months journey was something that amazed all of them, that we were just trying to figure out an idea that worked and willing to work on it.
Well, that PowerPoint comment, I think, must have hit home for a lot of people on the call. So a lot of these questions were about the early days. Fast forwarding to how you evolved over the last 6-7 years, can you walk us through how, especially as the chief operating officer of the company, as this company scaled and grew really fast? And by the way, I was a user of Urban Clap when it was Urban Clap back home in India, and I was a regular user. Loved the product. It was super consistent. How did you manage to have that level of consistency in a business that's so decentralized, right? Where your customers are, you're not directly interacting with your customers physically. Neither are you directly. You are interacting directly with your service providers. But when you're scaling so rapidly from a headquarters level and from an ops level or from an ops standpoint, how did you manage that scale up and ensure that the company didn't break apart while also growing so rapidly?
Yeah, great question. I think that piece of quality and scale and standardization is really at the heart of our business and operating model. So most of the offline service world today is run by small businesses. The salon or spa you go to is a small business. The cleaning company that sends you cleaners is a small business. Most businesses you find online to get a repair work done, to get your home painted, these are SMBs that employ service professionals. And this version of the industry offline is a really bad one, because the top, let's say 5% of businesses do well, and the rest 95% are always struggling. And that struggle really creates two kinds of problems. It makes getting good quality service inconvenient and expensive for customers, and very small amount of the money paid by consumers trickles into the pockets of service professionals. It's really what makes this industry broken. We changed that dynamic very significantly. We said, let's take this truly online. And that will happen when we change the backend from small businesses to a technology platform. And we didn't have this, aha insight on day one. We in fact started working with small businesses. And then we realized that we're just not able to deliver good quality because every business has their own different standards. They actually don't do any training. And by having this middle layer, we're actually hurting the consumers versus helping them. So almost, let's say, a year into the business, we realized that we should eliminate the layer of small businesses, and we should empower directly the end service professionals through technology on this platform, where they become not employees, but micro entrepreneurs. And we give them or empower them with all the tools that they need to become really high quality service professionals. That's really the basis of our model. We call it a 5-level full stack platform, where today there are close to 40,000 individuals, and all of these individuals were, let's say, working as a beautician in a salon or a repair technician at a company. They left that, came to us, they got trained, they got empowered with technology, they were given tools and products, which are again urban company standardized, and they were given access to the end customers directly. So this model, of course, we can talk about the details of it. It's fairly operationally involved, because we run hundreds of training centers, we run warehouses that supply products, we run a financing business that gives them loans to get started. But this full reconfiguration of the backend is what helps create the magic, because what it does is, while these are 40,000 individuals who operate from their own homes, they never even come to UC offices after getting trained, but they are all highly motivated to do their work. They're highly consumer driven, and they are constantly rated and monitored. So it's a very performance driven plus customer aligned service organization that creates quality at scale.
Makes sense. As you expanded your business and you presumably opened new categories or new service categories, so first part of this question is, how did you decide which new category to enter and expand into? And two, were there failures along the way where you entered into a new category and you realized, man, this is going to cause the death of the company? Were there like near-death experiences like that? Can you share a little bit about that piece as well?
Yeah, sure. We've had a slightly atypical journey there. So like I said, we were figuring out this right operational model. In our first avatar, we ran a different model, which was easier to scale. So from the get-go, we actually had more than 100 services on a very lead generation like model, which some of you might have seen in the US. That's how most US service platforms today work. It's easy to get started. It's easy to run many categories. And then about 2 years into the company, we started moving from that model into what I described a few minutes ago as our full stack model. So imagine a company, while running and scaling, change from one business model to another. That was very painful, but the only benefit it had was, because we were already running hundreds of services in our broken previous model, we knew which services have traction, which services have consumer need, and what those pain points are. We actually had a slightly easier run to say, out of those 100 services, which are the 10 that are large markets that we should go full stack into and build out, and they will in a few years end up being really large businesses. That decision point was easy. The difficult part was building each of these businesses, because they required one by one to figure out and build. For example, beauty services for women, you had to figure out how would you train beauticians and set it up for success. That while you learn a bunch of things there that translate, there are enough differences when you think about now getting into the appliance repair industry and building that from the ground up. And then when you think of a very different one like home painting or home improvement, the decisions were simple to say which are large and broken industries. The build journey has been complex, but that's the fun.
Awesome. So I have a couple of more questions before I open it up to the audience. Again, just a reminder, everyone, for those who joined in late, please keep your questions ready. I'll open up the floor very soon. And again, if you can switch your videos on, that will be really nice. So the first question is more around your M&A strategy. I saw that you've completed 3 acquisitions so far. At least that was what was publicly available. Uh, how do you think about M&As? What are you looking for? Do you actively look out for companies that you can acquire to help you grow fast, or is it more opportunistic, where you know a founding team, or you just happen to come across a particular deal? And then how do you think through the economics of an acquisition? At what point do you say, okay, this is a good deal, let's go ahead and execute it, versus pass on the deal? How do you think about those pieces?
Our 3 acquisitions were very small and very early into the UC journey. I don't think they've played much of a part in the company's success. So I would say so far we have been very organically built. We've not been closed to acquisitions, but we've not been able to find a company that's worth acquiring. So my simple way to look at acquisitions, as someone who's not successfully done acquisitions, by the way, so that's important to preface, is to look at what that entity outside has, what kind of do they have real capabilities that your company does not. And if they have real capabilities that will help you jumpstart your business in a new direction, then it's worth acquiring. If they just have a business that that you're going to acquire and add revenue to yourself, that's something you could have either built on your own in the next year or two. Then it's in a more tricky space, and we've certainly found most companies to be in the latter. They're doing some business, no real capabilities different from us, and hence we've not actually done acquisitions in the last few years. That said, of course, very open to if there is such a company, whether in India, in the US, or in any other geography, that's doing something that's aligned to our principles of building the service industry and has a few unique capabilities, then we'll be very open to it.
Yeah, actually, that was going to be my follow-up question. So do you think in the next 5 or 10 years of evolution of your company, do you think M&A might play a more significant role, especially as you're looking to expand geographically? Do you think that shift might happen, or you'd still prefer just building your businesses organically, no matter which geography you operate in?
Like I said, we are very open to companies worth acquiring have been very hard to come by. And even in the US, we've done some early scan, and what we've seen is, there've been several attempts at trying to build a services business, but none of them have taken the business truly online. They've all been layers on top of the existing offline industry, just trying to connect customers with businesses and trying to basically replace Google as a marketing channel. No real change in the service experience, no real change in the backend on the service partners' earnings, and hence we're yet to find a good company.
Okay, makes sense. In terms of your international expansion so far, it looks like you've expanded into Saudi Arabia, UAE, Singapore, Australia. So these are the geographies that you seem to have entered into. And of course, now you're thinking about an expansion to the US as well. How did you start thinking about your international journey to begin with, given that the Indian market itself is so large? So why not just focus on the Indian geography? Why expand into all of these different markets? And then what's your criteria to have at least chosen your initial set of markets?
Yeah, great question. See, the decision to expand international was purely a function of ambition versus desperation. Many companies may take the route of building the home market, and when the home market slows down, then you think of going outside. I would call that the path of desperation. For us, it was, let's say, the year 2018. This was 4 years into building Urban Company. We had two things happening. We were getting grips on a business model and an operating model that was actually working. So product market fit in India. And second, we were realizing that the problem we are solving, the business we are building, is very universally true. Service industry is globally broken, and we could dream bigger and build a global company. So it was a function of ambition to say, should we start doing it now or should we do it later? Should we do it ever? And we said, no. While we started by saying, let's change the industry for better in India, if the opportunity is global, we should go after it. And the first choice was a very simple one. We'd seen other companies in India, from India, succeed in Dubai, and that was because there were, while there were differences, there were some similarities in the consumer and the market. So we went after Dubai. That worked. After that, we asked ourselves the question of what could be other similar large markets. So we didn't go after the traditional Southeast Asian markets like Indonesia, etc., because we wanted to evaluate markets by business potential, not just by population. So we looked at cities all around the world, and we said, okay, we are in Dubai. Of course, the largest businesses in the largest cities are in the US, but that will be a big leap. So let's make that in 2 steps. So cities like Singapore, Sydney, and Melbourne seem like stepping stones to go to the US. Yeah, we've done that over the last couple of years, grown more in clarity and confidence that our model works not just in Dubai, but multiple countries. And now US, here we come.
Awesome. So on that
it's
note,
not a pending decision. The decision is done. All the works already happened, and we should be on the ground in a month or 2 and live.
Awesome. I feel like the US piece would be relevant to a lot of the folks who are part of the South Asian Business Association. A lot of us are from India, and we're looking at opportunities both in Indian tech as well as in America. So that intersection is really relevant for a lot of the people on this call. So on that note, I'll open the floor to questions. If you have any questions, please raise your virtual hand. If not, I have my own list of questions that I'll continue on, but I'll give folks about 5-10 seconds to raise virtual hands, and I'll just call on people. Okay, Ben, go ahead.
Hi, Varun. Thank you for joining us, and congratulations on everything you've built, and especially your very significant raise. Very exciting to hear about the beginnings and what you guys are building. I guess I have a question, partially just thinking about the expansion in the US, but just in general with the business model, how you've gone to each country. Since it's a two-sided marketplace with SMBs on one side and consumers on the other, my last company I was working with SMBs primarily, and I felt that pain of the top 5% really winning the lion's share, the 95% struggling. How do you go about getting both on the platform? I know SMBs are wary when it comes to tech. So how have you guys kind of cracked that nut and been able to also find success on the consumer and getting that both marketplaces to be robust?
Sure, a great question, Ben. So we actually don't work with SMBs. we realized the pain that you described, and we decided to actually look beyond. We realized SMBs are actually not a good way of running the service business, because they are a middle layer that actually keeps a lion's share of value while adding very little to the value of the consumer. So out of every $100 that a consumer pays, the SMB actually keeps 70 to 80%, and the end service professionals get only 20 to 30. Because running an SMB is costly. You got to have an office, you got to have overheads, you got to spend money on marketing. So that market structure was one that was disadvantageous to the end service professionals who were doing all the work, and was not allowing investments in the right areas. None of these SMBs were actually training their service professionals because they had no money to train. They were barely making any money. So we realized, let's change the industry and empower the end service professionals. So actually we flipped the model to say, out of the $100, instead of 70 going to the SMB and very little going to the service professional, we'll flip it around. We will keep, let's say, 20 to 25 as our commission, and we'll get the end service professional to keep lion's share of the money. That we can do if we build with technology, if we have scale, and if we change some fundamental assumptions. So beauty as an industry, we moved from consumers going to salons to services happening at home. Most other similar decisions were taken to say, let's work towards a platform that takes services truly online, makes services on demand, makes them convenient, makes them affordable, improves quality because we're going to invest in training. And simultaneously, the back end is going to be such that service professionals are going to make more money than they would today. So changing the fundamental operating model unlocked benefits for both customers and for end service professionals. And that made acquisition on both sides easy. To customers, we were a relief to say, for the first time, I can download an app and in 2 minutes, I can make a service booking, as opposed to actually spend days on it. And you know what? The individual actually shows up on time, is trained, does the work at a fixed price. It's everything like I expected. For them, it's a brilliant aha moment. And that satisfaction that consumers got helped grow the consumer side more than anything else. On the service professional side, of course, it was difficult to convince individuals to leave their jobs and take risk in joining a platform. But what worked was we found some initial risk takers, and because they saw enormous benefit, they practically saw their incomes grow 3 to 4 times immediately because of the economics equation I explained. That helped a ton. They got their friends who were at their previous workplace to all quit their jobs. They got their family members into it. Many of our service professionals have become part-time trainers for their community, to say, I'm going to train other people who live in the same community as I do, so that they can also go on to join Urban Company and see the transformation that I did. So yeah, long story short, was really realizing that taking this business truly online is going to be a lot of hard work, but it's going to unlock so much value that's going to compound and grow.
Brilliant shift. I appreciate it. Thank you.
Thanks, Ben. Vibs, you want to go ahead?
Yeah, hi, Varun. Thanks again for taking the time. I was born in India and then grew up in Australia. And so I often think about, how would a pan-Asia business operate, given that they're quite different markets. And so especially for Urban Clap, I think there's an element of operational discipline you want to enforce to make sure services are provided on time and high quality. I'm curious as to what some of the learnings are around operating in very different markets and being able to execute on a services-driven offering to high quality, given that you're dealing with different working cultures, different types of probably capability in professionals. Like, it'd be great if you could comment on that, and how you've been able to accomplish that.
Yep, fantastic question, Vibs. And I would say that the learnings that we've had have actually been the same across all our markets. It's actually a few fundamental truths about people, about humans. So when we go to a service business, our entire experience depends on that individual, the person giving you the massage, the person giving you the haircut, or if you, let's say, booked a cleaner, then that cleaner is going to decide everything. He or she is going to decide whether they want to come on time, whether they want to do a good job, whether they want to charge you what the prescribed amount is, or say that, your house is different. Your house was bigger than was planned, so I'm going to charge more. Everything depends on that individual. For that individual to perform well, a few basic things need to happen. That individual needs to be firstly trained and empowered to do a good job, which today does not happen. Most service professionals across the world just join because of lineage. My dad did this, so I'm doing this. My friend is doing it, so I joined. And there's very little formal training, so it's more apprenticeship, and hence they're not truly empowered to do a good job. That's the first thing we realized. Second thing we realized was the system is not meritocratic. Everyone gets the same pay, whether they are average, great, or poor. That's something that needed to change. And thirdly, the actual final amount of money that I'm getting needs to be material. Today, service professionals across the world, whether India, Australia, or the US, operate at minimum wage or actually lower than minimum wage. So there's no real incentive to do a good job. And that pay, does not stay, even if does not grow, even if, they've been a cleaner or they've been a beautician for 10 years, 15 years, 20 years. It barely grows. So these three things had to be changed for the end individuals to be skilled, for them to be happy, and for them to be motivated. And that's what we did. We opened training centers. So for the first time, they knew actually how to do a good job. Second, we changed the business model to say, the money needs to go to them versus to the SMB. And third, we created a performance culture. So there are ratings which monitor how well you're doing. We don't, based on ratings, just like chuck people out. We help people who are on the lower end to say, basis consumer feedback, this is where you're going wrong. So either come in and we retrain you again, or we retrain you digitally. And if you're doing really well and your ratings are top notch, then you will get more jobs and you'll make more money. So just these three fundamental pillars, which all of us can think about in any company, were just missing from this industry.
Yeah. Okay. Thanks.
Umang?
Yeah. Thanks, Varun, for being here. Curious as to how your thinking has evolved, building an organization from scratch to what I assume now several hundred people. How your thinking has evolved on recruiting, managing, and motivating people to build like this world-class organization. Are there any practices or insights that you regularly employ and you want to share with us?
Yeah, great question. And as I say this, you'll probably be able to connect the dots to what I just described about our service professionals as well. The basic truths sort of continue to be the same about what get people happy and motivated. So a few things we've done as part of culture. First, we take a great deal of time and pain and effort in hiring. So I think the first 500 people in the company would have been interviewed by me directly, and it still goes on for a large share. So you have to really get the right folks into the company who believe in the mission, who are long-term oriented, who really want to build something good. Second thing we do is, we believe a lot in internal growth and internal promotions and impact of what people do. So one of our cultural principles is ownership. So we believe in not having too many management layers, but having every individual own a sizable piece of building the company and leaving them to do that. And what that does is it of course gets people fired up, but then they also do well, and we constantly keep scaling their responsibilities. So it's very common for individuals to join urban company fresh out of college, and in 3 to 3.5 years be at significant leadership positions in the company. So what that does is they're creating impact and they're seeing fast growth. And we do a bunch of things to enable that, but I would simply put that into spending a lot of time with them. So I love to spend time with our team members to get them to do well at their job and to get them to grow. And third thing we do is reward their efforts and their ownership with real stock ownership with the company. And I think we have one of the largest employee stock pools that we keep growing versus diminishing, because we keep, the founders and investors keep adding to that ESOP pool by giving their own equity, because we know that those rewards sharing with people who are building the company with us is what will really take the company forward. So just three very basic things: bring in great people, help them do well and give them the opportunity to create more and more impact, and third, reward them fairly.
Yeah, thank you.
Anshul, do you want to go next?
Thanks, Anand.
I think you're on mute.
Am I audible now?
Yep.
Thanks. Thanks for being here. I have a question regarding the fact, Varun, that you mentioned you're disintermediating like the SMBs, and that takes away or frees up that portion of management fee that you have. The thing with, I think SMBs manage customer retention using some of those margins, because they can guarantee things like quality or repeat service by taking some of that extra margin and putting it into another service visit, for instance. In your case, how do you manage customer retention, or making sure that customers don't go directly with the service professionals if you're making just 20% of the margin? Like, how does that work with the gig economy is my question.
Sure. So, two separate questions there. I don't think the SMB does a lot of customer retention with that money. SMBs are actually barely profitable. They just have very high cost, and they are very inefficient at their business, because millions of customers buying services from a few 100,000 SMBs is a very inefficient matching model that results in too many businesses having too few customers. So I don't think they do a really good job at it. Second, the question of disintermediation or customer retention for us is an extremely relevant one. And we focus on that a lot as a platform. And we do two things. We focus on adding a lot of value to both sides, to customers and to service professionals, which actually makes them believe that going through the platform is better than going directly. So customers get access not only to a trained professional, but they get access to things like on-demand bookings of service professionals. So sometimes they might want to book the same guy. Sometimes they might, just want to value their time and say, I want whichever cleaner can come to my home in 30 minutes. We give guarantees around quality. We give guarantees around safety. And we have a membership program that rewards loyalty. All of these things consumers like, and hence want to continue to buy on the platform versus off the platform. For service professionals, any of you who've taken our services in India and spoken to service professionals, you realize they actually feel very happy paying the 20% because they see us adding way more value than that. We give them demand in the form of a packed calendar, so they are flexible to choose which hours they want to work, and a platform can fill their time according to their flexibility. Customers actually treat them with respect and fairness and pay them the right price because they came from the platform. If they come off platform, then consumers also sort of take them for granted. And they get all kinds of benefits around medical insurance and a bunch of things that only come with working on the platform. So both sides like going through the platform because the platform at scale enables things for them that would not be possible by disintermediating. And we also have a very unique feature which helps people actually form relationships on the platform. So if you've booked a haircut and liked that hairdresser, you can in subsequent bookings book that same hairdresser. You could even set up a monthly recurring appointment with that hairdresser to come to your home every month and give you your haircut at a desired time. So we actually help people form relationships on the platform if they choose to, if that's what they prefer.
That's very helpful, Varun. Thanks.
Dishant, do you want to go next?
Yeah. Hey, Varun. Thanks for being here.
Hi.
How are you?
Very well, Dishant.
Varun, just wanted to ask on behalf of everybody, it would be good if you can spend some time telling us about the roles in US. Which cities are you launching? What kind of roles are available?
Yeah. So we are launching from Austin, Texas, which I hear and have firsthand seen to be fast becoming the next Silicon Valley. It's an absolutely fantastic place, and what's happening there. Over the first year or so, we want to expand to the next 3-4 large cities in Texas and go from there. So that's how we are going to be geographically. We start with a very lean team of leaders who we ask to do things on their own for some time before they start building their team around them. So there is at this point a couple of opportunities, and I'm sure over time as we take the business live and grow, there'll be more. So these are primarily on the business side right now, and will involve interested individuals in basically taking ownership of large parts of Urban Company's business platform. Our platform is divided by categories. So one of the roles, let's say, is to be the country head for the beauty and wellness business. In India and in other countries, that accounts for close to 50% of our revenues today. So the opportunity is really to lead that business from day zero, build from the ground up, starting with things like, okay, what are the service SKUs that should be live on day one? In the whole beauty world, which businesses should we start with? Should it be hairstyling? Should it be massage? Should it be facial skin services? What should it be? Building product market fit in one city, expanding to multiple cities, and really taking it one step at a time. So it's a very entrepreneurial role. And you have the opportunity of taking a model that's proven in multiple countries into a very, very large US market, and build something which certainly over the next few years will be used by millions of customers, and will create employment opportunity for tens of thousands.
And I'm assuming, Varun, that it's okay for some of our members here to reach out to you, or what would be the best way for us to engage with your company?
Yeah, we do have a job description that I can send to you on email. There, individuals will find more details.
Okay.
Yeah, if you're keen on having a chat, there'll be an email. Please write to us. We'll set up chats with you and take it from there.
Okay, perfect. I'll share that with the community after the chat today. I think we have time for one more question. So Meghna, if you want to go ahead, please.
Thanks, Anand. And thank you so much for being here, Varun. It was fantastic to have you. I guess to just bring things full circle, we've been talking about what you guys are up to recently. Would love to actually hear from you on the first year of starting this journey. A lot of us are there more than, at a later stage in our career where we've built a successful company. And I guess one of the things that we keep discussing in class is the chicken and egg problem. Did the idea and come first to you guys, or was it the decision to start something entrepreneurial? But would just love to hear more about how it all began.
Yeah, absolutely, Meghna. We spoke a little bit about this earlier. I guess all journeys are different. For us, I used to work in San Diego right after my college in India, at a tech company, and I realized very early on that while I was decently good at building tech, I wanted to build it back in India, and I wanted to build it into something that created impact on lives of millions of people back home. So that was really the core inspiration. I had no idea because I didn't live in India outside of college. So I was naive enough to pack my bags and come back and say, we'll figure out what company to build. Let's just go on with it. The first idea was something that we dreamed up, and it failed miserably. Everything about that idea, now that I think about it, was terrible. But what it did teach us was, we can't come up with the ideas ourselves because we're not facing the problems clearly. So we spent the next few months immersing ourselves into everyday lives of thousands of people in India. And when we did that for long enough, it became very obvious what the problems are, and what mission a company should get on. So it was certainly inspiration first, not idea first. And I think at least living our journey, we realized idea first is really, really hard because there are so many aspects of an idea that sitting in a conference room or a college dorm you will not think about. So at least my suggestion would be to spend a lot of time in the real world, get exposure, and find a purpose or a mission that you can fall in love with. Execution is something all of you are smart enough to figure out. That purpose, which is large enough canvas and inspiring enough to keep you going for 10 years or 20 years, is very important.
Awesome. Well, I want to be respectful of time. I know we're almost coming up to the end of the hour. I know Samar has his hand raised, but Varun, would you have a couple of minutes to take that question, or if you're running tight, we can also.
I can go on for a little bit longer if you guys.
Oh, perfect. Samar, if you're still online, please unmute yourself and you can go ahead and ask the question.
Varun, thanks for being here. I was hoping I could ask you a question that has that I'm generally curious about in the sort of phase of IPOs, startup IPOs in India right now. So I saw that I think about 5-6 months ago you raised some significant amount of capital at about, I think it was a $2 billion valuation, and I wonder what are your thoughts on matching up to those kinds of valuations at a time when companies like Zomato and now Paytm and Nykaa are being questioned or sort of being brought into the light for outsized valuations. Not that they don't deserve, not that they don't add significant value to their customers and to the ecosystem. But how do you think about being a marketplace and meeting up to a $2 billion valuation? What are your thoughts on the ecosystem as such, and where do you think this is headed next?
Yeah, great question, Samar. I'll keep it simple and only speak about ourselves. I really have not much of an opinion about other people's businesses. So we focus on two things. One is, do we have a large enough canvas and market, and is our business fast growing? And if you look at just the last 18 months of COVID, you'd expect COVID as a phenomena to be very negatively impactful to a business like ours, because two strangers meeting in a consumer's home. But even in this time, we've been able to innovate and earn the trust of consumers, and our business actually scaled 2.5 times through COVID. And even right now, we are literally less than 3% market share, even in our largest cities, in our largest categories in India. So we are a fast growing business that has a lot of headroom to grow going forward. We actually think we'll be able to maintain this pace of 100% year-on-year growth for quite a number of years. And second, our business is actually has a very good unit economics. So while we did raise money, most of the money we raised in this round in April this year is untouched. In fact, most of the money we raised in a financing round a year before that is also untouched. We've been a very capital efficient company that's spent under $100 million to build a business that has a revenue of $100 million. And our unit economics is very strong. So the business becoming profitable and having a very good profit margin as the business scales is also something that we are very sure of. And I think if business can grow large and be hugely profitable, then good valuation will follow. Certainly, today's valuation from some eyes could be rich, from some eyes could be undervalued, and that will keep changing. But I think our long-term value will be very, very high because of the two reasons I mentioned.
Great. Well, thanks for that response, and thanks, Amar, for that thoughtful question at the end. So Varun, thank you very much for your time. Congratulations on your phenomenal success, both personally of having taken the risk to leave BCG and start Urban Company, and then also for doing so well over the years and achieving this double unicorn status of sorts. Congratulations, and wishing you all the very best for your future plans and your expansion efforts as well. And once again, thanks a lot for your time today.
Thank you, guys. It was an absolute pleasure telling you about what we have done so far, what we are up to. If anything, what will give me a lot of joy is if this discussion in some way inspires you to find your own mission in life. You guys have, you're at the cusp of some major decisions on how you want to spend the next few years of your life. I think it's a very important decision by any yardstick, and it will certainly take you in a certain trajectory for many years to come. And my only guidance would be to find a mission, a purpose, a cause that you can fall in love with and dedicate many years of your life. And from everything I've seen, both in myself and in many peers and friends who've had similar backgrounds like yours, that's what matters in the long run and gives you satisfaction on a daily basis.
Great. Thank you so much.
Yeah. Cheers. Bye.
Okay. Bye.
Thank you.